is what do you think the Fed should be doing differently, or is there anything you would, if you were running the Fed, what would you be doing now?
Well, if I was running the Fed, I would abolish the Fed and then I would resign.
Okay.
But that's. I think that they can't do as much as people think they can do either, right? They have this tool that they can move the interest rates around, and they can try to talk the market into doing what they want them to do. The expectations channel, they'll call it. So, like if you saw like the run up in the 2-year Treasury, a big chunk of that was when they started talking about how much they were going to raise rates, and it kind of shot up at the short end to front run them. So they can have some impact, but I think a lot of their impact is really on financial markets and putting a bunch of liquidity into the system so that capital markets go crazy and you get higher stock prices and people wanting to lend and borrow and things like that. But in terms of controlling inflation, I don't think. They could do it if they try hard enough, right? If they want to raise the rate really high to the point where financial assets collapse and the wealth effect takes over, people don't want to spend anymore, or people get so worried about it that they really pull back, they can have some impact. And then if they can get borrowing costs on the short end high enough to really start to impact people's buying decisions, they can have a little bit of an impact. But you even heard Powell say it, right? I remember the line where he said, "Oh, we're learning how much we don't actually know about inflation." So it's basically like admitting that they don't really even know how much inflation is going to go up. And then I was listening to his last conference as well, and he said a big portion of this inflation is energy related, and we can't control energy prices. Yet we're still going to keep raising rates until we see the CPI go down. So like they'll even admit to you that like a lot of this stuff is somewhat out of their control, right? If you parse their comments enough.
Yeah, that's interesting. They're doing a decent job, slowing down some industries where, for me and you in real estate, it feels like, why would anyone be doing this? You're raising rates. It's harder to do these deals now with higher interest costs. But that's in a way sort of their goal for the average person living in this country. Like they're not concerned with what interest rates are necessarily. Right. They're worried about the price of gas and food. Like they're not making these, these types of investments. There might be a customer of them. They're a renter. But yeah, that's because then you raise the short-term rates, and there's going to be shopping centers or apartment buildings that would have been bought. That might have been a deal where you're going to buy it, you're going to renovate it, then you're going to put your permanent loan on later or sell it, and then that would be one of the SOFR plus whatever spread deals where now the rate's higher. Deal doesn't look as good. Maybe it doesn't happen. The current owner says, well, if that's the price, I don't want it. I think this interest rate stuff, they agree with you. It's going to be kind of it's going to shake out in like a year or two. And I don't need to sell today. Right. And that's one less construction project for people to work on. That's one less thing for a lender to do. There's less work for attorney. So they are slowing down some things, because I got to imagine that the transaction volume in real estate is going to be slower. We've seen in some of these deals where it was real reliant on that sort of short-term borrowing and also future growth, let's say, where you're buying and you're banking in a lot of growth and taking on, and something that you're not holding long-term either. You're making a real tough bet now on like where interest rates going to be in 2 years, what's going to happen with my rents. If you're buying something long-term, that's going to smooth out. If you share the view you do, and it's similar to mine, where you're going to do a 7-year hold. This is just going to be maybe a choppy first couple of years, but it's still, you're going to like your basis. There's very few periods of time, like if you look at it over 7 years, where you wouldn't have done well in a real estate deal. So, but to kind of tie that into inflation, like they are having some impact because they've slowed down, I think, the housing market and some of these, commercial transactions.
Yeah, some of that's definitely occurring, and it's occurring more really in the capital markets side, right? Like you said, with people not being able to be as flexible with some of their loan terms, and some of that needs to happen because it was really frothy. But some of that froth, you also remember the froth was created by their low interest rates in the first place, right? So it's kind of like, to me, like I don't think that any human being should have the hubris to think that they can like manually command and control the economy and get things right. And I think that's why the Fed has a reputation for overshooting on both ends and creating these bubbles. And, I think if you look at most of the boom bust cycles that have occurred in the past, a lot of that is really caused by the Fed to a large degree because of the fact that they'll manipulate interest rates where differently than they would otherwise be. And then you get, money going to places where it otherwise shouldn't go, whether it be the housing bubble or even the dot-com bubble. And then what kind of comes from that, the bubble that we just got now with all this stimulus, the inevitable downside to that is the bust that comes, right? It comes again because the economic gravity that we talked about can't grow things faster than their underlying rate for too long before something blows up. So, I think I would prefer to see markets decide and price risk in their interest rates appropriately, because then you usually don't get that kind of froth in the first place where somebody can get some stupid loan because rates are held artificially low rather than where they should be based on where risk is pricing in the economy. So if the Fed does have a role, if you want to twist my arm and say I couldn't abolish them, I guess I would say, just make it so that there's liquidity available at overnight rates to the banks so that, like, systemically there's no risk, right? So like a bank gets a big run on deposits or something like that, they can go borrow money from the Fed temporarily if they put up collateral and they pay a penalty rate or something just to, like, stabilize the system. But outside of that, I think they're causing way more harm than good.
And then just get rid of the Fed funds rate as like an official rate.
Yeah, let the repo markets and the overnight, lending markets take care of it.
Just figure out what that should be.
And the Fed can just be there as a backstop in case things get really crazy and you need temporary liquidity or something.
Yeah, or if there had to be a Fed funds rate, you would just say, all right, we're just going to pick a rate that makes sense based on the growth. It's going to be just like 1% forever kind of thing, or shouldn't be zero, or 25 bips like it was. But
you like to see it floating with the market, right? So that the market could determine that, and the market's going to be a lot better at figuring out when it should go higher because there's too much risk, But if you were going to manually set it, maybe the closest thing you could do is what they call the Taylor rule, which basically takes economic factors and says that there really should be no guesswork to it. You should basically calculate where inflation and a few other things are and then just peg the rate to that, which I guess that would be better than, just kind of what I view as fairly arbitrary with how they're doing it now. But yeah, I think it's kind of odd that most people, especially people in business, we realize things like rent control are ridiculous and stupid. And, anytime that the government tries to step in and plan too much stuff, the results are always bad, right? Yet, like, these guys in the Fed get to plan interest rates and try to plan where prices are in the economy, and interest rates are the price of money, and you price so much stuff off of those interest rates that, like, but they just get a complete pass, right? Like, nobody thinks, should we have these guys planning all that stuff, even though it's terrible in every other aspect of the economy when we try that? So
yeah, it's all because it's well intentioned. Right, with rent control, they're trying to help out people that can't afford their rent, and then same thing with this. We're trying to help the economy not get too overheated or too too slow, but then it's always overshoot, like you're saying, and create a new problem.
Right.
So thanks for joining us on the Rise and Invest podcast. Please be sure to hit that subscribe button on YouTube or wherever you enjoy your podcasts. If you'd like to dive even deeper into real estate investing, check out our company's website, riseinvest.com. If you are an accredited investor, you can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Rise Invest Holdings LLC and its subsidiaries. The views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities, and the speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.